Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Thor Explorations, traded on the TSX.V under the ticker THX, and on the US OTC markets under the ticker THXPF. And we are joined today with the President and CEO of Thor Explorations, Segun Lawson. And Segun, it's always great to get you on the show to get an update. When we talked about a month and a half ago, we were looking at some of the operational highlights, but now we've got the financial numbers in and a few updates on exploration at both Segilola and at Douta. Just for people listening in, the company is operating in Nigeria at the Segilola mine, and so we'll talk about that today. We'll talk about some exploration around Segilola, and then they have a second project, the Douta Project in Senegal, a large development stage project with a lot of drill work going on. So we'll dig into all that right now, but Segun, why don't you kick us off with the Q1 financials, what key metrics that you want people to know about the operations at the Segilola mine?
Hi, Shad. Thanks very much. I'll be pleased to go through that. Look, from our production in the quarter, the ounces sold were 17,420, just over $2,000 per ounce in Q1. Our all-in sustaining cost for the period was $632 per ounce sold. I will have to qualify that to say that it will normalize to around about $1,100 for the year. And the reason it was so low this quarter was because we had gold from the prior period sold in this quarter. So we do expect that number to be around about 1,100. We were very pleased with our profitability for the quarter, with net profit of $12.4 million US. And I think one of the big achievements for the quarter, again, was making another significant payment towards our senior debt facility of $8 million. And that's now been reduced to $15.2 million at the end of the period. So, we're well on the home straight in being completely deleveraged from our senior debt facility. And our net debt position is at $14.3 million at the end of the period.
Well, Segun, I think that's significant. Why don't you just recap for people when you brought the mine, the Segilola mine, into production in Nigeria and you had the debt facility? It was the first time anybody had started a mine in Nigeria in recent time. But just explain to people how quickly this mine generating so much revenue has paid down the debt from where you started to where it is now.
Yeah, look, we poured our first gold in July 21, and we've been making our quarterly payments, which were tailored towards the production profile of the mine. So, since that period, we're very pleased to have made these payments, and we're very pleased that now we're in a position to be completely delevered from this facility and also start strengthening our balance sheet quite significantly.
Well, and just remind people what your all-in sustaining costs are, because I'm always stunned at how low they are compared to a lot of the major operators and mid-tier operators that you see in the gold sector with a couple $100 more per ounce that they're losing because they're not getting it in margin that you're capturing. So maybe just speak to your all-in sustaining costs, how you keep them down, and how you have handled inflation over the last couple of years and kept it so low.
Yeah, look, our all-in sustaining cost is very competitive, and we expect it, to average out over the next couple of years to be even lower than $1,000 per ounce. So our margin at today's gold price is very, very compelling. And, as a company and as a project, this is a very, very cash generative over the next few years. This is why the second part of our release, I guess, should I say, is aimed at our strategy over the rest of the year, which is extending this mine life as a main priority, because extensions to this mine life are materially significant to us as a company in terms of enhancing the value. There will be no more debt. We'll be looking at strong free cash flows. We'll be looking at low all-in sustaining costs, and every incremental ounce we find is highly value accretive. So, our strategy towards extending this mine life has always been looking at near mine targets, which we've been doing and we continue to do. However, now we are fully committing to accelerating the underground program and really doing this because, first and foremost, we've already drilled an underground resource. So our first part of our exploration is converting that resource into an indicated resource and trying to grow it. Secondly, since opening the pit and after 2 calendar years of mining and carrying out daily grade control, we have a better understanding of the structural controls of the gold here. We don't believe this deposit is closed out at depth, and we believe now we've made significant progress on our debt repayments. Now is the time and the opportunity to start chasing these parts of the pit down, chasing them at depth, which we've never closed out before. So we're very excited by this, and we've committed 10,000 meters to drilling this as a first pass, and hopefully, with some very good results, we'll be able to increase the meterage with a view that we can have a seamless transition to an underground contribution to production at the end of the current mine life. We also hope that this is supplemented by additional open pit satellite deposits subsequent to the current mine life.
Well, let's dig into it just a little bit further. Like you mentioned, 10,000 meters, you're looking at that underground potential to keep putting some meat on the bones there, and you're still looking at some of these regional targets. Are there any particular regional targets your team is more animated by? And then also at depth, about how deep are you going? How many holes are you putting in with that 10,000 meters?
So look, it's very hard to say the number of holes, because we're doing a range of holes. Some are starting inside the pit and going down. Some are starting from outside and chasing some targeted areas below the pit. The average depth of these holes is about 200 meters. If you consider we've already mined out about 150 meters from the surface, so we're already starting from 150 meters below surface. However, what we will say is our strategy in chasing these shoots down is to try and do it incrementally. So maybe chase them at 50 meter increments, making sure we remain within the ore body, and that'll give us a lot more confidence in understanding the continuation of where this gold is.
All right, so we'll keep tabs on how the drilling goes around the Segilola mine, and also some of those regional targets that you're still looking at for at-surface potential open pits. Another thing that we should probably mention is, what you expect the annual guidance to be for this year, what the mine life currently is now, and then how you think you could extend it with this drilling.
Yeah, look, the annual guidance for this year is 95,000 to 100,000 ounces. We are reiterating that guidance. The mine life has another 3 years after this to run. Look, we think to move the needle, we're looking at a minimum of 200,000 ounces. We're trying to, as a first pass target, and then increase from there. So, we internally have set ourselves a target. We are looking to double the existing mine life, and we hope this drill program is the first phase of that, and look forward to updating the market with these results. Sorry, just to answer the end of your last question, there were two parts to it, and I just realized I didn't answer the last bit. The meterage we're looking at with the 10,000 meters, that should probably be between 40 and 45 holes that we're drilling as a first pass as well. So that's a lot of information that we're looking to get out of this.
Fantastic. And then just out of curiosity, some other people had asked in a chat room, and I wondered what your response would be. Is there any opportunities in Nigeria to bolt on other projects that could also extend the mine life? Because you've got all the sunk cost in place. Could you acquire any projects in the area to kind of feed the beast?
We're certainly looking. That's the thing about being a first mover in the country, is that, we have the ability and the expertise in country to review a lot of projects, but also have a lot of projects gravitating towards us. So we are assessing a number of opportunities. I can't give too much information on that at the moment, and we will continue to do so. And the exploration is running in parallel, the underground exploration and the assessment for inorganic opportunities.
Well, and we should mention that there has been one opportunity that's come your way over the last year and a half, and that is you do have some tenements there in Nigeria focused on lithium, and your team has been exploring there too. So why don't you mention that is, speaking of opportunities in country, being a first mover, that's an opportunity that's come your way that you're still pressing your bets on as far as the lithium tenements.
Yes, look, we spent the first quarter of the year and also the last quarter of last year consolidating our land position in the southwest of the country. We have also been working up drill targets there. We're kicking that off this quarter as well, and we expect to update the market with these results over the course of the next couple of months as well. This is certainly a project which we still believe can add a lot of value to the company. We're hoping to be in a position before the end of this year to have a maiden resource, and then we can look at the various options we have here. This provides great optionality for our existing shareholders. and it's all funded internally. So we've budgeted an initial 4,000 meter drill program, and once we have those results coming in, we'll be updating the market.
Okay, well, let's shift over to Senegal, to the Douta Project. This is a large potential mine number 2 for the company, and it is something where you are doing about 15,000 meters of drilling this year. I guess just for people listening in, just remind people of the size of the Douta deposit right now, and that you've already got some economic studies out on it. Just give people a nice snapshot of Douta and then the work you'll be doing this year.
Yeah, so the Douta Project is a project we've been drilling over the last few years. We have a resource there that we upgraded last year, a combined resource of 1.78 million ounces. About half of that's already in the indicated category. We've now kicked off various PFS, preliminary feasibility study work streams, which have been going on. The main work stream where we're pushing at the moment is the metallurgy. However, whilst we've been doing that, we picked up an additional piece of ground, which we've called Douta West, which semi-envelopes our existing Douta license and lies contiguous to it. We've been very encouraged by the initial exploration work we've done there. We've shown extensions to Makosa Tail. We've seen some new anomalies, which we've worked up in the period. And we've kicked off a drilling program there. And the aim of this drilling now is to increase the size of the oxide component with a very easy metallurgy, which will be obviously the initial years of any mine life that we have in Senegal. And, if you think of the resource we have, we're already looking at the oxide component around about 250,000 ounces. We're looking to double that over the next few months and incorporate that into a larger project, so a larger PFS. So we're excited by this. We think there's a lot of value here. We think there's a potential to build a project that has, a mine life over 10 years here. We're going through the study phase. We're going through this additional drilling phase as well. And in the second half of this year, we'll be coming out with a PFS that basically demonstrates the economic potential of this project, the commercial potential of this project to the company.
Well, it's exciting to watch because we've seen you, after talking to you year after year, grow this project from an idea to, like you say, 1.78 million ounces. And then you also have still a huge strike length of mineralization here that you could keep exploring. And there's all these new areas that you have found over the time that we've been talking. Are there more areas to be found? And maybe just explain to people the size and the scope of this project.
Yeah, look, our main resource has a strike length of 7 kilometers. We're looking at structures that lie parallel to it. We're extending it to the south now. We're drilling targets in the new license, even a long strike, which is 30 kilometers of our existing Douta original license. We have a number of targets. There's Mansa, Sambara North. That's all part of the 15,000 meters we've budgeted this year. And these 15,000 meters are budgeted and focused on shallow holes in the oxide. So there's certainly a lot of scope to generate a much larger resource here. And most exciting for us as a company is being able to do this in the oxide, which is very easily extracted and almost free dig. If you remember, a lot of our intersections are right from surface as well. So there's a lot of news flow to come out of Senegal. I personally believe people look at us as strictly a Nigeria play. I think, should this drilling hit the targets we expect it to hit, and once we've done our PFS and we can demonstrate the economic viability of this project, I believe there's a lot of value in this project that can be attributed to the company.
Yeah, great point, Segun. I think a lot of people do see you just as Nigeria tunnel vision, and they discount Senegal, but they shouldn't, because this is actually a lot bigger project than Segilola. Not as high a grade, but a lot more ounces than what you started with Segilola. And while Segilola is still growing and you're still drilling it, I just have to ask you here, do you think that it's a similar situation where you start with the easier oxide ounces for this economic study and eventually a mining scenario, but could you also do the same thing and go down into the sulfides and do an underground component kind of as a further look down the road?
Yes, certainly. Look, the reason we're doing the oxides first, because we've got such a long strike length. There's a lot of it. It's very easily extractable. But our aim as well with all this met testing is to design a process flow sheet that works for the total resource. And we believe that the oxides will be the first part of the ore body to be mined. However, we will then continue into the rest of the resource for the rest of the mine life. the oxide component, if we do get it above 500, 600,000 ounces, we're looking at an initial 5 to 6 years of free dig, low cost production before transitioning into the fresh. So it's very exciting. We are going through the process now to prove up this resource. We're going through the process now to design a process flow sheet that works, and having an enlarged resource and a mine plan for the mine life is all very exciting to present to shareholders at some point in the second half of this year.
All right. Well, we'll keep following along with all of the news out of both Segilola and the Douta projects, and keep us posted as more news comes down the pipeline. We'll get you back on. It sounds like it's going to be a pretty full second half of the year as far as all of this drilling going on and all of that news to report to the market. And if people listening into this interview want to follow along with the news over at Thor Explorations, definitely click on the link below this interview. It takes you directly over to the company website, directly to their news page. And Segun, as always, looking forward to our next conversation.
Thanks very much, Chad.